Hello traders, Fawad Razaqzada here, StoneX market analyst. And in the last couple of days, we've seen the markets try to price in the possibility of the Middle East tensions easing. But every time the markets have tried to stage a recovery, we've seen the markets then ease back lower, with traders not willing to hold on to their positions, which is kind of understandable given the situation in Iran and surrounding countries where the situation remains quite tense. And this has been reflected in the price action of the major indices. If you look at the German DAX here, we saw the index print a bullish candle yesterday, which looked like the market had bottomed out. But today, despite the earlier optimism, the index has turned lower and is now trading in the red. And it's similar price action across the board. If you look at the other major indices, for example, the Nasdaq, we can see a similar picture on the Nasdaq as well, although here the index is testing a key level of support at around 24,970-ish, which was previously resistance. The US markets haven't fallen as much as the European indices, but the trend of lower highs and lower lows remain intact. And for as long as this trend line is in place on the Nasdaq chart, the path of least resistance remains to the downside. It's a similar situation in the FX space, with the euro-dollar giving back earlier gains to turn red on the day, and it's now testing that level of support, the 115.78 level, which was the low from January, which was momentarily taken out on Tuesday before the market bounced back to reclaim it, suggesting that perhaps the market wants to bottom out here. But it's too early to suggest that a low has been created, especially given the lower lows and lower highs we are looking at here. For me, the key level to watch is at 116.70, which marks the 200-day moving average, as well as the previous support now taken out. It needs to climb above that level to provide us the first indication that the euro-dollar has bottomed out. Should it do that, then 117.50 will be the next upside target, where price support and the 21-day exponential moving average converge. We also have a bearish trend line coming in to play around that area as well, making it a key area of potential resistance. If eventually the euro-dollar breaks above this bearish trend line, then at that point, things will start to look a little bit more bullish once again. But we'll cross that bridge if and when we get there. For the time being, let's keep an eye on these key levels of support and resistance to determine which direction the market is more likely to head to next. So markets remain highly volatile and extremely headline driven amid the ongoing situation in the Middle East. If you like this video, please make sure to like and subscribe, and I'll see you in the next one. Take care.